Gold has shattered records, soaring past $4,000 an ounce, and it's sending shockwaves through the financial world. But here's where it gets controversial. Is this rally a sign of economic stability or a desperate flight to safety? Let's dive in. In a world grappling with economic and political turmoil, investors are flocking to gold like never before. The precious metal has seen its most dramatic surge since the 1970s, climbing over 25% since April, when former US President Donald Trump's tariffs disrupted global trade. And this is the part most people miss. It's not just about tariffs. The ongoing US government shutdown, now entering its second week, has delayed critical economic data, further fueling investor anxiety. Gold, often dubbed a safe haven asset, is prized for its ability to hold or grow in value during market chaos or downturns. On Wednesday morning in Asia, spot gold, the price you'd get for selling it over the counter, hit a staggering $4,011 per ounce. Gold futures, which reflect market sentiment, reached similar heights in early October. These futures are essentially contracts to buy or sell gold at a set price on a future date. Christopher Wong, a rate strategist at OCBC Bank in Singapore, notes that the government shutdown, sparked by repeated budget stalemates, is a tailwind for gold prices. Historically, investors have turned to gold during such shutdowns. For instance, during the month-long shutdown in Trump's first term, gold prices jumped nearly 4%. However, Wong warns that if the shutdown ends sooner than expected, gold prices could take a hit. Heng Kun Hao, head of market strategy at UOB Bank, calls gold's recent surge unprecedented, surpassing even analysts' predictions. He attributes the rise to a weaker US dollar and a surge in retail investors, ordinary people buying gold as a hedge against uncertainty. Gregor Gregerson, founder of Silver Bullion, a precious metals dealer, reports that his customer base has more than doubled in the past year. Retail investors, banks, and wealthy families are all turning to gold as a safeguard, he explains. Most of his clients are long-term holders, storing their gold for over 4 years. Gold will dip eventually, but given the current economic climate, I see it trending upward for at least 5 years, Gregerson predicts. Yet, gold's shine isn't without risks. OCBC's Wong points out that prices could fall if interest rates rise or geopolitical tensions ease. For example, in April, gold dropped 6% after Trump backed off from firing Federal Reserve Chair Jerome Powell. Gold is often seen as a hedge against uncertainty, but that hedge can unravel, Wong cautions. In 2022, gold plummeted from $2,000 to $1,600 an ounce after the Fed hiked rates to combat pandemic-driven inflation. UOB's Heng adds that a sudden inflation spike could prompt the Fed to raise rates again, threatening gold's rally. The recent price surge reflects expectations that the Fed will lower rates, making gold more appealing. Meanwhile, Trump has intensified his criticism of the Fed, publicly attacking Powell and attempting to remove Fed Governor Lisa Cook. Wong warns that such actions undermine confidence in the Fed's ability to act as a credible, inflation-targeting central bank. In this volatile environment, gold's role as a hedge against uncertainty takes on renewed significance. Here's the burning question. Is gold's record-breaking rally a smart investment move or a sign of deeper economic troubles? Do you see gold as a reliable safe haven, or is its appeal overstated? Let's debate in the comments.